Hello, I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights that'll boost your trading potential. Coming up, fresh geopolitical catalysts have sent energy names surging. We're going to break down whether the S&P 500 is gearing up for another leg higher. Plus, in today's technical take, we'll take a closer look at the big U.S. energy ETF, the XLE. Crude prices are wrestling with key levels, and oil and gas stocks are testing recent momentum. And our trading debaters, they are standing by with their first debate of the year, the bull and bear cases for beer and winemaker Constellation Brands, weighing resilient demand against margin pressures and shifting consumer trends. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. We are half an hour into the trading day. Let's check in on the S&P 500. We were a bit flat out of the gates this morning at the open after yesterday's nice gains, but we're starting to build some momentum to the upside. You can see the S&P 500 making some modest green on the screen right now. Of course, this was all following the military intervention in Venezuela over the weekend. Yesterday, we had oil and gas names in the States popping. Different story here in Canada, different dynamics, but the U.S. majors were popping, the oil field services companies, and even the big money-centered Wall Street banks today. It seems to be a bit of a different play. Let's jump into the heat map. I want to see actually what is happening right now. We got a bit of momentum in some of the big tech names, Nvidia, but I was noticing the healthcare stocks right now. A lot of green in that category. We've had obviously a lot of questions about whether the healthcare sector can start to show us something in 2026, showing us a little something today. I want to take a look at OneStream. We don't talk about this stock a lot, but the shares are popping up about 25% right out of the gates. This on a report out of Bloomberg News, citing sources familiar with the situation that a buyout firm, a British firm, HG, is in advanced talks to acquire the financial software maker. A nice pop for them today. This stock hasn't even been public for about 2 years. So now you already talk about go private. It had a pretty tough 2025. And Under Armour, got a bit of a Canadian flavor here. The stock jumped in the pre-market, opened a bit flat, and it's just trying to find a bit of direction right now. But Fairfax Financial, Prem Watts' shop, disclosing it purchased nearly 42 million shares of the sportswear company. That means they have about a 22% stake right now. The market liked it in the pre-market, still trying to figure it right now. And that's your market update. Right, joining us now for a more technical take on what is happening out there in the markets is here in a minute, Jason Natick from our TD Direct Investing educational team. Welcome back. It's 2026. It's so far, what are we on the 6th day of January? We got a lot to talk about. The S&P 500, a nice pop yesterday for U.S. stocks. What are we looking at here?
Yeah, Greg, we're going to do a little bit of a look back into 2025, just sum up that. You know, the markets had a year of low lows and high highs, and two continued dynamics were AI and tariffs at the center of it all. You know, in April, we saw the tariffs knock down expectations of global growth. We saw bond rallies get triggered overseas, and we saw a stock sell-off. And in fact, in the U.S., we saw that U.S. equities underperformed almost every other major region in the world. Treasuries rallied for the first time since the great financial crisis. But when you look at the S&P as a whole and what it closed at, it looks only weak in comparison, but it did return 18% on a total return basis. The good of AI did more than the ugly of the tariffs at the end of it all there. We did see the broadening of the rally as well, with AI CapEx spending also buoying up the industrials and energy companies, and the banks benefited from capital activity spending. So now we're turning our attention to 2026. Where do we go from here, and where does this shape up? You know, there's always been a lot of theories and postulations of where the S&P could end up, 77,000, 7,500 from few price targets. But I just wanted to look at a few indicators that might suggest where we may end up, just on a red or green basis. One, we know about the Santa Claus rally. It's more than just a term. It's actually looking at the last 5 days of the calendar year and the first 2 days of the starting of the trading year. And if they end up positive, that might be an indication into the year, closing out on a firm note. This one did tick red, though. The close yesterday was below the Christmas Eve close. So it was 69.32 and 69.02, so 30 points lower. But the other two, which is the first 5 days indicator of January, so you look at the first 5 trading days, starting from Friday, of course, till this Thursday. And on a historical data basis, since 1950, whenever that's been a positive close on the first 5 days of January, the S&P's posted a median gain of 14.2%. And this is about 83.3% accuracy based on the Stock Traders Almanac. And the final one is the January barometer, and that's just looking at the entire month through the end. And if the end of the month is positive, that does signal that this momentum may carry forward. This data goes back to 1928, in fact, and this shows a median gain of 11.8% when the S&P 500 ends January on a positive note there. Looking at the charts, though, here's what we do see. We do see this big channel that's formed from the April lows. This bullish channel still remains intact. We can see that it did just most recently, just before the close of the year, we formed this inverse head and shoulders pattern. You can see we got the left shoulder, the head, and then we got the right shoulder. This is usually a bullish reversal sign, and we've seen this 6,900 level or 6,902 as a key resistance, and this could be the break. We are green today, in fact, just broken above it. We do want to see at least 3 closes confirmation above that level and making new higher highs to see that this level is going to turn from resistance to a support level. So this certainly acts as kind of the next bastion here, but well intact of the bullish channel. What I'd be on the caution of the downside is on the lower end of this boundary. We're just sitting below that 50-day moving average in this blue line here, which sits at about 68.50. If we breach that, then we might test and come down below to the 200-day moving average at that 6,800 level. But right now, we're firmly intact. We're cycling upwards, and it's the 6,900 level to look at going into the next quarter.
Definitely one of the big questions of 2026, what the markets are going to get up to. And as I said, we've already had a lot of drama to start the year. Of course, the military intervention in Venezuela, what it meant for a lot of the energy names south of the border. You're looking at the XLE.
Yeah, XLE is Spider's Energy Select ETF. It was obviously, timely with a few stirrings over the weekend that took place. So this ETF gives exposure to oil and gas and consumer companies, notably Exxon, Chevron, and ConocoPhillips make the major weighting of this ETF itself. Why are we talking about it? Well, because of Venezuela, of course. They hold the largest proven reserves in the world, sitting at about, I think it's about 300 billion barrels is what they have as of 2023's estimates, which accounts for about 17% of the global supply. Now, they don't have very good infrastructure, though. The last 2 decades, they haven't been able to pump up nearly, I think the highest peak, they peaked out about 3 million barrels back in mid-1990s.
Yeah, now
that's
I think they're
down
sub
to like
a
a third of
million
it.
now.
Yeah, just about 900,000. Now, out of that 900,000, what's interesting about this is about half of that goes to China, 400,000 barrels. Now, it doesn't make a big portion of what China's consumption is. It's about 4% of it, but they do go to China. And when they had the ship embargo that they put on there, no oil was moving except for one company. And the only one American company that still exists in Venezuela
Exxon.
is Chevron.
Chevron's
still there, yeah. So they're still being able to ship. So it'll be interesting to see, Venezuela does pump out heavy crude, which is like a sludgier, thicker crude, which is perfect for U.S. refineries. Now, right now, they get it from
ours too. So
that
was a different reaction yesterday in the energy names, whether they were Canadian
because they
or
get
American.
They get it from Venezuela, a bit from Mexico, and they get it mainly from Canada. I don't think it's we don't have to worry about a threat because to get that oil to the U.S. is still going to be many years away with infrastructure they've got to build. But looking at the XLE, it's obviously taken a shine to the news that's coming out of there. We saw it really. Again, we have a classic bullish channel similar to the S&P 500 where we saw it stay within it. It did break down recently towards the end of the year based on oil price pressures, of course, coming down. Oil didn't react as much yesterday as we saw when the news did broke. We did see some of these names tick up. We saw a big, I'm going to try and zoom in here and just show everyone. We've got this big sort of what looked like a bullish candle, ended up red yesterday. It did tag this 47 level. And this is a key level because if we go back to April, Greg, and we go back to 2025, that's the highs it rejected off of. And this is what's forming like, what's a classic like triple top formation where it rejects off this level and then bounces back. And we saw today, it's actually given up all those gains that it had at close yet. So the resistance is really the 47. Maybe market's not buying into a whole lot of what might happen for these companies just yet, but it's still within the bullish channel here, and we're going to keep an eye on as long as it holds firm and stays above that kind of that 45 level, which is going to tag the lower bound of that channel. But and RSI is confirming it is still making higher highs, which tells us momentum is still favoring the bullish run. in this move.
Interesting stuff. I think it was TD Asset Management's Hussein Aladina talking yesterday that the markets can move a lot quicker than the infrastructure can move, because we saw some big moves yesterday, but as Hiram was saying, it's going to take a long time to get that infrastructure in
lots
place.
of dollars. I think I saw something around like $58 billion would be required to bring their pipeline back online. So we're time and money. It's two big factors.
Time and money. You have a daily pill.
I do, yeah. So this is kind of timely. Maybe if some New Year's resolutions are out there, maybe if that gym is just a rerecurring charge on your credit card and you're not going, there might be another way to accomplish that.
I went twice over the holidays.
Oh, good for you.
I'm pretty proud of myself.
And it shows, if I don't mind saying.
Just get it ticked off.
Absolutely. But so the news out over the holiday season was that Novo Nordisk got approval on the pill, the first ever pill form for their Wegovy weight loss drug. Now this has got FDA approval late in December. It's the first ever pill form, as I mentioned, and timing is critical for them because they've been battling, tooth and nail with Eli Lilly over the last year with the similar drugs coming out, and there's rumors that Eli Lilly will have a new drug coming out in a couple weeks' time. So this is fast times for Novo Nordisk to get their pill out to market. They've already seen pickup from all the major pharmacies, online brands, as well as even Weight Watchers has picked up Wegovy from a distribution perspective, and then Novo Nordisk has actually stepped in and said that they're actually going to be providing direct sales to self-paying customers on a monthly recurring plan. So an interesting kind of tangent they've taken to continue to reach out to the customer base and gain market share. So one of the things here, like this GLP-1 space, it's in the news. It's not quite AI dominant in terms of the news stories that it's making up, but it's out there. Now, thinking and looking about where this market is projected to go, 2025, still not peanuts. We're talking $66 billion of space for that drug. Projected out to 2034, almost $900 billion. So there's huge growth potential here. And if you can be a big player and hold on to that market share like Novo Nordisk is hoping with the new pill form, Wegovy, that could be something that could really catapult their stock. So we take a look at the chart. The stock price has been beaten down over the last little while. Once again, it's extreme competition. We've got some regulatory challenges. And there was even some setbacks from a clinical trial perspective when they're using these drugs to try and treat Alzheimer's. So that all contributed to negative pricing. We've seen almost a 50% pullback on the stock over the course of the year. But if we zoom in to kind of more nearer term timeframes on the chart, we've got some more kind of positive kind of story to tell. The company did find support around $44, so it kind of stopped some of the bleeding. And there's been some indicative signs that there might be in term for a measured move that might be projected up. Near term, there's been really resistance around $50, but it bumped up against that. We see that there's been a kind of inverted head and shoulders that was created on that chart. We've broken through $50, confirmed the pattern. The next thing that I want to see going forward here is as we continue to move up, there's actually gaps here in the chart, so positive momentum building in the chart. There was a double top that formed. That's a bearish sign. If we can break through that, what do we say about gaps? Oftentimes they're oftentimes looking to be filled in. Once we can continue to break through that 60-ish level, we've now got blank space in the chart from negative gaps that Novo Nordisk could look to push that price onwards and upwards.
All right, interesting stuff, gentlemen. Thanks for that. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It'll take you to our TD Active Trader Live website, where you can try the platform risk-free. Just open a practice account by clicking on that Try TD Active Trader button. Then once you're ready to switch to a live account, simply export your workspace and start trading for real. It's time now for the main event, Trading Debating. This week, the stock in the spotlight is Constellation Brands, a drinks giant behind household names like Modelo and Corona. Before we get going with the debate, gentlemen, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now back to the stock of the hour, Constellation Brands. Guys, when I was walking up the train this morning, it was foggy. We're under a freezing rain warning. The snow's crunching underfoot. I closed my eyes for a moment, not when I was crossing the street. Dreamt of a warm sun, a warm beach, and a beer in my hand. We're talking beer. What's the allure here?
Well,
beyond the little fantasy I had in January as a Canadian.
I mean, it's beer. It's one of the original alcoholic beverages, developed at the dawn of civilization, product of thousands of years in the making, and it holds a basic staple in the global economy. And with the company we're looking at, obviously today, Constellation Brands, STZ, they make the premium version of it, of course. And they have a legion of fan followers, so we think we'd put it to the test and see how it holds up.
All right, Jay?
Yeah, it's a huge conglomerate in the alcohol space. The biggest, actually, U.S. company by market cap, $34 billion. You rattled off some of their really iconic brands. There's many more if you check them out on their website. And hey, many of the folks out there in the audience, they may have raised a glass with Constellation beverages without even knowing it. So
maybe the lucky Canadians among us are heading to the airport someday soon and getting on a plane. Let's get some time on the clock. I'm not going anywhere. I'm right here for you all through the winter. Get your 2.5 minutes to make your bull and the bear cases. A little time to counter. Draw from a hat as always. And what do we got? We got Huron with the bull case. Why don't you kick it off?
Okay. So Constellation Brands, as you mentioned, is a high-end alcohol franchise that's temporarily priced like it just got cut off on the last call. Offering a premium beer and wine as well. Portfolio as part of its, and its valuation clearly has room for earnings growth. And also multiples expansion as sentiment starts to normalize. It's structurally advantaged. The brand house temporarily got tripped over a macro cycle, but investors should not mistake that stumble for a terminal hangover. And I'll tell you why. Let's talk about unmatched brand power, first of all, that they have. They're the #1 brewer and seller of high-end beer in the U.S. market. They own brands like Modelo Especial, which is the #1 seller for them, Corona, Pacifico, and premium wines like the Prisoner Wine Company, Kim Crawford, Lingua, Francois. I don't know who comes up with these names, but it rings true. And one of the things I wanted to also mention was when you look at Corona, which is what you would have typically on a beach, the Sunbrew, they're also expanding their product line. So they're including new flavors, non-alcoholic spaces becoming kind of a thing, especially among Gen Z consumers, and low-calorie brews as well there. The one other thing I'll mention is let's talk about pricing power as well for a second. The company is, when you look at financially, the first 6 months of this year, we know was a bit rough. They had shipments declined about 6%, yet net sales per shipment increased 1.6%. Which tells us that the first half of fiscal 2026, beer shipments were down, but revenue per shipment was up. They're also focused on their share buybacks, so $604 million out of the $4 billion allotment that they have, which roughly marks about 17% of their market cap, which tells me if this company is struggling, they're not struggling that much because they're still going to be able to make that money with free cash flow. Let's go into the charts and talk about this, though, for a moment. Where I wanted to draw everyone's attention to on this chart is this area right down. I've marked it down to the 2020 COVID lows. And yes, that's right. This stock has been, punished to say the least. It's back at these low prices, and anytime it dropped into this price level, it's kind of taken a bounce up. We can see this big downtrend that it formed at the start of this year. But one thing that I want to take for heart is it had a breakout of this downtrend. It created about a week's worth of green bullish run there. But we know this downtrend is completely broken because it tested it on the retest on the bottom on a green candle and bounced off of that level. So I know this is a key level that this is where we're seeing supply come in and we're seeing buyers step in.
Ooh, first bell of the year. There you go. Jay, what do you got for us on the bear side?
All right, let's take a bit of a step back here. So irrespective of broader social trends, you were talking up Modelo Especial a little bit. That's certainly their flagship brand. But it was actually dethroned by bitter rival Michelob Ultra late last fall as the #1 beer sold in bars and restaurants. And not only that, it's also been passed at the all-important home sales, the retail sales network by Michelob as well. So you can take that feather firmly out of their cap. That's no longer theirs. But before we talk specifically about STC, let's address kind of the elephant in the room, the kind of the broader trends. I was researching a Gallup poll from 2025 in the U.S. And the U.S. is where 98% of their sales are coming from. So keep that in mind. We've not seen alcohol consumption in terms of percentage of the population at this low level since 1939. It's at 54%. So that doesn't bode well, especially when we think about many people are saying they're what's called sober curious, or there's an overwhelming number of, moving on here. But even those that are drinking their products, 41% are saying they're looking to reduce their drinking, either from a health perspective or the broader economy is making it untenable for them. And then 75% of those people that are responding are saying they're going to be participating in some sort of dry challenge. But moving on to STC quickly here, their largest driver of revenue is Mexican beer, and it's showing negative volume trends like you alluded to, an underlying consumer demand weakness. And let's focus on the sales from beer perspective. They're expected actually to be down 3% for fiscal 26, with operating income is shrinking, around 8%. So not versus higher growth expectations. So that's a big shift. And wine does make up a smaller bit of their balance sheet, but they've seen huge declines. Recent data showing a drop of about 28% in net sales, even net a negative operating margin, so not great for the underlying metrics. Jumping here into the charts, let's take a look. We can certainly see that there's been a big downward trend. We're talking over the last year or so, about 45%. We had big gap down at the start of the year, and that continued some of the bleeding throughout. Big red candle. We really see long periods of consolidation, not a lot of bullish movement. We even here, so there's not been a lot of pricing pressure moving the stock up. If we move into kind of shorter time periods, into more recency here, we've got let's get that in there, right? We've got a lot of what's noticing here, when we gap down based on consumer data, pricing changes from analysts, weakness in the market, the stock has rejected off that level. We've seen a near-term bullish or bearish pennant forming. We'll have that up there a little bit later. Not normally a great
It's
time
like a
for the
Saturday
stock.
morning
You get to start with the
cliffhanger.
pennants.
Good morning. You find out next week with you. As I say, you got 3 minutes now to go at each other, so plenty of time to fill in the cliffhanger there.
Yeah, I'm gonna challenge Jason on what he talked about, some of the fundamental numbers that he brought up, and if you look at just the valuation for a moment, and you mentioned trends overall of the beer space as an entirety, okay, not so much STZ, but when you think about their long-term PE ratio, which sits at about 20. And if you use management's guidance numbers that they give for F26, and we take, let's say, 11.45 as the midpoint on the EPS, and you take a conservative multiple of 15x, not even using their long-term average, that puts the price stock at $172. If we were to do the same thing on an operating cash flow basis, you talked about operating income coming down again. Multiple is usually 15. Management's guidance midpoint is 14.48 on that. And if we again take that multiple down to 12, conservatively, it puts the stock price at 174. You're looking at least about a 15 to 20% premium based on the current pricing that you have over here.
You may see that true, but if we think about analysts out there in the market that do this for a living, 20 analysts on it that are through Webroker and TD are measuring the company. Only 10 of them have got them listed as a buy. So we've got a 50-50 relationship.
What's the average price target, Jay?
It is higher than we're at right now, but if we take
average price target?
Tell me that. If we're just going to plant our flag on that, but if we want to think about underlying metrics are going to push them to that price, their own sales targets from the brands over the next 2 quarters are down 15% and down 6% from previous times. And if we want to think about other than just beer, let's talk about trying to kind of a nice the balance sheet here. They've been in a process of trying to divest brands from there to try and bring in cash flow.
The wine business. The one that's losing money, yes.
Right.
And any company should do. And keep in mind, as you mentioned, beer makes up about 84% of the total revenue. Mm-hmm. So you're talking about 16% of a business that's fledging, and it's mainly marketed outside of North America where you have it. But
and you know where they can't market outside of North America is their beers, because they have a North American specific license to there, so they don't get access to their biggest portion of their business. They can't actually take out to those markets that are growing. So in Eastern Europe, in South America, they don't get access to do that.
Well, they don't need to do that at the moment, because if you look at just the fundamentals and you look at some of the Anheuser-Busch and Molson Coors, and if you just look at those companies, because you're not going to invest in Constellation. You don't want to invest in these other beer companies, because look at gross margin. They sit at 51.1% gross margin, and Molson Coors, which is the North American brand, sits at 36.7%. When you talk about operating margin, they sit at 34.5%. We have 14.8% on Molson. So what they're doing with their premium is they're still able to squeeze out more money within the sales that they're doing than any of the closest rivals or competitors that have, including Anheuser-Busch, which has a stake over Europe.
Well, so if we're talking about domestic sales as well, where is a lot of those Anheuser-Busch and the Molson Coors? They're likely domestically producing. 40% of the beer from Constellation is coming from Mexico, and that's what's subject to tariffs.
No, it isn't. In fact, that's wrong. Beer itself is not tariff.
But the aluminum that's coming in, so that's
like 20 basis points is what management said that's going to impact their overall cost when it comes to it. But they're looking at more packaging.
Out of time, but I was enjoying it too much. I was enjoying it too much. Spirited debate, gentlemen. Now we want to jump into the platform, talk about possible option strategies, whether you're the bull or the bear. Let's start with the bull.
All right, let's jump into it, Greg. So I'm going to bring up the chart. I'm going to switch this just to a weekly chart, and we'll look at a possible way you can play this on the upside. So again, we've got the weekly chart pulled up on Constellation here, and one of the things I wanted to just show was, again, we're coming down to these COVID lows we've hit. We've seen a bounce up of there. And if we see that there's an expectation that they could turn things around or consumer sentiment may improve into this year, of course, after coming off of the tariffs shake-off, then we could see a potential recapture of a few key levels, 160, 190 on the upside. So if you wanted to play this just for a pure upside and mimic a stock position without buying the stock, through options, one of the ways you could do that is through what's called a long synthetic stock option trade. So here's how this trade setup works. So you're looking to buy a call. In this case, we're going right at the money at the current price, which is sitting at 140. And we're looking to sell a put at the exact same strike price. Now we're going further out in time. So we're going out to the December cycle, so full year on our side. We want to reduce the effect of time decay on the option. Now, what this essentially does, this strategy, the way you think about it is, and if you buy a stock, it moves one for one. Like if the stock goes up $1, it just moves $1. But options don't behave in the same way. So by doing the combination of this two, we're getting a one-for-one move, and it's something with what's called deltas on an option. So call option has like a 68 delta. In this case, this put option, because we're selling it, has a 32 delta. So you combine the two, you get a 1 delta. So every move that the stock makes, this position will mimic the move of what STZ is doing. So in this case, we're looking for some upside potential over here, of course. We've got some scenarios that are going to play out, of course, through the year that we want. So first things first, let's talk about like the max gain. I've written unlimited there. In theory, it is unlimited because whenever you go long a call on the upside, there's no sort of ceiling, a cap to it. You can make as much as you want, but we are going to be limited as long as basically until we hold the stock, and if we're holding till December, whatever price that comes, or if we take it off the table. So that's one side of it. The loss, however, is a little bit asymmetrical comparatively, because you can see it's $144 loss, or the equivalent of $14,400 on this trade. Now, when would that play out? Well, if the stock goes in the other direction, we're going to, and let's say the worst case scenario happens, it goes to completely zero, just bottoms, then we would lose the full cost, because when you sell a put, you are essentially buying the stock at the strike price at 140, but we also are paying for this trade. And when I set this trade up yesterday, it was costing us about $4 per contract to trade this. So you also have to factor in what you paid. So that $4, so the 400 plus the 140, well, the 140 translates to 14,000, which gives us the 14,400 loss that we potentially face if the stock goes to zero.
Okay, interesting strategy there. Possible way to play it as a bear.
All right, a possible way if you're bearish on STZ would be to think about selling a bear call spread into earnings. We've talked about this in the program is when we're
earnings are tomorrow after the
earnings
close?
are, I had it written down here.
Yeah.
Is
Tomorrow after the close,
okay, okay, perfect. Our team effort there. I like it. So,
there you go.
But it's controlling your time frames, right? Because it's a volatile event. We have expectations of what we think is going to happen, but we don't know for sure which way the market's going to push things. So controlling your time frames, controlling your probabilities, and making kind of hedge decisions based on that information. So we thought we could potentially sell a bear call spread out through Friday, so we're covering our earnings event, and then we're potentially, hopefully, if it doesn't go over a certain level, we're going to make max gain. Well, I'll walk you through the trade here on the chart as we progress. But let's bring up. I wanted to kind of finish my thought around here on this bearish pennant here, because it really highlights the price levels of the trade that we potentially can make. We can see that 144 has been kind of a near-term resistance for the stock. We can see we broke above it, but then we had a sharp depreciation in the price, creating the flag of our pennant. With the pennant forming here, typically this would be a bearish continuation pattern. We did break above it, but these patterns are often kind of liable for retracement, looking for other entry positions. So we bounce off this 144 level that I was mentioning earlier as that resistance, and bring ourselves back potentially towards the pennant, giving us downward continuation. So that's kind of the basis of the price line, that 144, that we can consider for our short leg of our call spread. I want to bring us back quickly to our option chain as well, because I've got the 144s up here for this Friday. What I want to be looking at is I want to be looking at the deltas. The deltas right now, we've got some actually movement up in the price since we looked this morning. So the deltas are a little higher. Right now it's at 51 1%, meaning it's right around a coin flip whether or not it's going to be in or out of the money. And our goal for this trade is for it to expire worthless and out of the money. So we're taking, and this might be a little bit on the higher end of risk side of the trade that you might be looking to take, but because the time frame is so short, if that might align with other people's assessment here. But let's go back to the chart. So 144 would be the strike we could sell. When we're thinking about the spread, one of the nice things about the spread is that it limits our upside loss potential if it does go against us and break through that 144 price level by buying a further out of the money call that caps our losses at the width of the spread. So if we sell a 144 and turn around and buy a 149, that's a $5 wide spread, meaning that max gain is the credit that we're going to receive. Yesterday I was looking at the trade, it was $1.65. So $165 would be our max gain per contract. And then by buying the 149, that $5 width of the spread, I know that's kind of the topic of the discussion we like to have is around the risk that we're going to be taking on, is that the difference of $5 less the 165. So we're talking $3.35 if it gets up to 149 or above it. So that we've definitely limited our loss potential by not taking an uncovered or a naked position on here. But we've got small amounts of time, and obviously we've got the resistance there that's been on the chart that we've demonstrated. That if we get continued bounce off that, then this could expire worthless and we make max gain.
All right, interesting strategies, guys. Thanks for that, and thanks for laying out the bull and bear cases for Constellation Brands. Just a reminder to our viewers that this debate was for educational purposes and does not reflect our personal opinions about the stock. And before we move on from beer, I just wanted, people are probably wondering, like, what are they having here? This is a cup of tea, because it is not a beach, it is not warm, it is miserable and cold and damp in Toronto. I'm not going to vouch for the boys here, but it's 10:30 in the morning, so I'm going to assume they don't have beer in there either. Before we move on, though,
no, she would be the big reveal.
Hearing's non-committal, so I'm not telling you what's in my mind at all. You don't get to know. Okay, you're going to show us how to customize the options chain.
Yeah, we want to customize the options chain. It's one of the things that I like to do, not only using the chart to identify key pricing zones, but when we're thinking about risk, when we're thinking about probabilities, getting key data on the option chain can help us make quick decisions. So let's kind of jump ourselves in there and do that. So I've got mine already set up. So when I'm thinking about selling options, I want to understand kind of what the deltas are, helping me understand the probabilities, kind of the pricing correlation between the stock and the option. But also I've got theta on here as well. I want to see what the impact of time is, to see what that decay is on a daily basis, so I can understand kind of how that's going to be offsetting any other market movements. But there's no one size fits all experience in TD Active Trader. So let's go ahead and show the audience how they can make this their own. I want to first bring you up towards the top right hand corner of the option chain. You can see this filter button. If you go ahead and click on that filter, you've got the ability to kind of customize what you see in the chain. I like to keep things pretty standard, but if you know you're always trading calls or always trading puts, you can simplify the chain to really make this your own. You can even put in non-standard options if that's something that you want to be dabbling in. Buyer beware. Make sure you're doing your research before entering any positions there. So the filters is there. But if we want to speak about customizing the column sets, that's going to be done if we take a look kind of above where the stock quote is in the top right-hand corner. This, we call it a hamburger menu. These three lines, and anytime you see these around the platform is where you're going to be able to make some changes to that individual widget. If I go ahead and click on here, that should open. Not sure why. There we go. Just got to make sure I get it in the right place. This menu that opens up, we can go ahead and change the option chain. This is where we can pick and choose the specific columns in our chain. I'm going to go ahead and let's just go ahead and remove delta and theta, and I'm just going to quickly add in open interest as one. And I'm going to go ahead and add in volume. It's in alphabetical order, so I'll find volume towards the bottom of the list. So adding those in, I happen to have mid in there, commonly also referred to as mark. It's a common option quoting technique. It's just the midpoint between the bid and ask for those that are interested in learning about that. But there we have it. We've got a new customized option chain. If we're thinking about liquidity, right? If you're buying an option, you want to make sure that you're going to be able to get out of it in an easy way. Looking at open interest and volume can be one way to do it. Volume is just if you're comfortable trading stocks and ETFs, that's just how many contracts have traded today. Open interest, if we're thinking about those 144s they had as my short option in my trade, it's showing me 65 for today. That tells me there's 65 open contracts as of the start of the day. Open interest does not update in real time throughout the day. It tracks how many open contracts are open as of the end of the previous day. So if you come in tomorrow and you see that it's open and the number has changed for you, and it's a higher number, that means more people have traded and cash flows into that particular contract. And otherwise, if it's down, there's not quite as big of a pool you're able to trade in with that at that particular time. So hey, you can. This is just because Jason's got it this way doesn't mean you do you when you've got your system up. But there's a really nice way to really make this your own and kind of get the details you need at a glance.
All right, great breakdown of that. Of course, people who want to know more about the platform, we do have interactive sessions. There's one this Wednesday at 2 p.m. Is that Brian? Is that our buddy Brian doing that one?
Brian, if you've seen him here in the chair here before, Brian is taking the hosting duties on that. I believe it's a chart specifically how to use research tools and charting tools on the platform. So watch lists, heat maps, like chartings and study setups. So you're in good hands with Brian. So come join him at 2 o'clock on Wednesday, and he'll take you through a detailed hour-long session on the platform.
All right, always a pleasure spending time with Brian. I think the audience would enjoy it too. For more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. And if you want to attend that class on Wednesday, just scroll down, look for that tab that says Join a Live Masterclass. Registration is open now. Before we wrap up the show, we're going to take a look at some of the other key things investors are focused on. What is on the radar for the rest of the trading week here, and what are you looking at?
Big one, Greg. The official jobs report for December is the weekly schedule highlight for the market this week. But it's not all. I'll also be looking at the ADP report. So that one's in fact coming out tomorrow. That's the private sector report. They, in fact, the last month that they released it, they came out with a negative print, negative 32,000. That's the worst number in nearly 3 years that they had. Expectations are dramatically different for this forecast. For this reminder, this is for December's numbers that are going to come out. That's going to be a plus 45,000 on new jobs for the ADP. But the big kahuna, of course, which is on Friday, which is NFP, non-farm payrolls. The job numbers will get the job unemployment rate as well. What we're going to see there is the expectation is if unemployment notches up a little bit higher at 4.7, that'll be what the expectation is. This would still be the highest level of unemployment since September of 2021 if it does meet that number that they're looking at. Jobs numbers are expected to come in at 54,000 for December on a positive side. But you know, we've seen negative numbers and revisions as well, so we'll have to see how that number stacks up there. So what we're looking at, that's going to move it. If we see a disappointing jobs number, that's going to increase the Fed's impetus to do a cut. Of course, this year it's only one baked in right now. Fed futures are pricing in 2. But if we do see that rebounding a bit, then that's going to pour a lot of cold water on those Fed rate cuts there. So that's one to keep an eye on Friday. That's going to maybe move the markets there. But other than that, we're starting to hop back into earnings. So I'm turning my attention into next week, starting with the airlines. Delta Airlines is one that's coming out, of course. So we know this is the official term. They're the provision of scheduled air transportation for passengers and cargo. So they'll be reporting the Q4 2025 earnings on Tuesday before the open. Consensus coming at EPS of 158 and revenue of 14.75 billion. They've had a strong record of the last 4 quarters beating on the consensus estimates on both the bottom and top line there. They are expecting, one of the big things to look out for, of course, is they have adjusted their earnings to approximately $6 per share going into this guidance. And they have free cash flow estimates of $3.5 to $4 billion. But one big trend that they will keep an eye on was the holiday season that it's going to capture, especially Thanksgiving. The Sunday after Thanksgiving was marked as the busiest day in U.S. aviation history, as the TSA screened about 3.13 million passengers across the country. And I'm sure Delta's going to be a beneficiary, so we should see some positives come out of that. But other than that, they're also doing some big things. They're advancing their fleet renewal program. They've got 40 aircraft deliveries. They're really, leveraging on their Sky Miles program and American Express partnership with their Sky Miles joint venture that they have together. But they're also starting to use dynamic pricing now, AI dynamic pricing. They're going away from a traditional pricing model, and they've also rolled that out. So we'll probably hear a bit more of how that pricing is stacking up and how they're getting some advantage on key peak season demand there. But coming into the charts, Greg, we'll look at it. It's obviously resonating with the market. We've seen this big symmetrical triangle pattern form, and what essentially it is we've seen lower highs that were formed, as you can see in the peak in early 2025 when it started to bounce up and made a lower high. And then on the bottom side, we're seeing higher lows that are forming over here. Now, what had happened was we saw this breakthrough happen in November with a clean breakthrough with 3 consecutive green candles. Usually we consider that those three white soldiers when you see these bullish candles, and it's kept that momentum. This used to be a previous area of resistance at the 62 level. I've marked it as a support now because it's bounced and held that line. And what we've seen form coming into this new year is this classic bull flag pattern, which is an indication of another bullish run. So the pattern break is what we want to see key. We saw that happen, in fact, yesterday, a big bullish run, and we saw resistance now sitting at 72. In fact, it hit an all-time high at 72.34. So going into this earnings next week, expectation on the market is about a 8% move, about $10. So we should see it either hold this resistance or break above it and test and make a new high at around that 80 level.
Great, interesting name to watch. What do you got on the radar, Jay?
All right, so we're still shaking off the holiday doldrums here, and in the earnings season is no different. So it's a really neat opportunity to kind of take a look, a little of a broader net, and look at some interesting companies we might not otherwise speak about here. So here I'm going to talk about Acuity. They are firmly a mid-cap stock. We're talking over $11 billion of market cap. Is a company that focuses on using technology to enhance energy efficiency through building and lighting systems. So they got a lot of neat things that's going on. And right here, I'm gonna throw out some buzzwords for some aggregators out there. This is a company that fashions itself an industry leader when we're talking about bringing together the Internet of Things and AI. So kind of interesting sector that they're looking at. With a broader focus in the economy and with kind of the tariff wars that are going on, and with all of the kind of political speech that's going, reshoring manufacturing is kind of something that's really been talked about. This is a company that could be at the center of some of those changes. So interesting to take a look. Now, this is a company that over the last 5 years has actually demonstrated margins over 44%, which is consistently because they get high in that space, and they've got strong cash flows. Analysts are forecasting kind of more of the same coming into the earnings. So interesting to see what story comes out. They're looking for an increase of 12% EPS year over year, and they're looking for actually revenue to crack the $1 billion mark for the first time. So kind of all ears for that. But jumping into the chart here for Acuity, we can see over the last 2 years, up 85%. 1 year's really telling the same story. What I'm kind of looking at here is the 343 kind of was when the stock kind of broke into kind of price discovery mode. It was a resistance point. It took its time getting over that point, but when it did, it kind of retreated back to it, which is not altogether that uncommon. But it confirmed that previous resistance now appears to be near-term support, and now we have a triangle pattern that's kind of forming as we progress towards earnings. We want to look to see which way it breaks out. If it's out of the top, then that could be a bullish sign. Out of the bottom, that could be bearish. Usually when we've got the incoming trend as higher highs and higher lows, this is looked as a continuation of the trend, but we want to see which side it breaks out in on coming to that, and we can see that we bounced off of new highs multiple times, so the stock is building up pressure. We'll just see which way it breaks out to the top or the bottom with earnings coming up later in the week.
All right, interesting stuff. We covered a lot of ground today. Welcome back to 2026. I know there's going to be a lot of ground to cover this year, and we're going to cover it together.
Got it. Looking forward to it.
I might get so sentimental already.
Yeah.
We're going to cover it together.
I
think I'm just going to say goodbye now before I weep. That's our show for this week. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching. Get all sopped now.